My name is Don Campbell. I'm the senior analyst at the Real Estate Investment Network. It's our 21st year of analyzing real estate markets across the country, and wow, do we live in exciting times. Well, in the new book, it's called The Little Book of Real Estate Investing in Canada. It's a book that they call it The Little Book. It's the 26th in the series of the Little Book series. First one of Canada, first one of real estate. It's an around the world series. And what I've done in this book is make it so that home buyers and investors know what questions to ask. They know where not to buy and where to buy, and whether it's a good time to rent or not a good time to rent. You know, what it's done is it's boiled it down into, quote, a little book to make it easy so people can make smart, well-informed decisions. Well, the success formula really is about looking at markets and how they're going to perform 18, 24, 36 months out. Because what I am finding, whether you're a realtor or whether you're a home buyer or even just somebody writing a news article, is the focus is on average sale price and number of days on market, etc. You know, if you are focusing on that stuff, guess what? You are 18 to 24 months behind me and the strategic investors, where we like to look. We like to look at the gross domestic product of a region, which then leads to job growth in the region, which then attracts population. And guess what? When they move into your area to fill these jobs, they need a place to live. Therefore, vacancy rates go down, then rents go up, just some basic supply and demand. And that's when people, usually 2 to 3 years after the trend begins, is when they start to buy property. So if you look at population and job growth, it will tell you how the market's going to perform 24 months out. The buy and hold, or the purchase and hold strategy, is how you make true wealth in real estate. Yes, you can make some money when you're buying and flipping, but in a market right now where there are so many mixed signs, the flippers are the ones that are going to get themselves into trouble. Now, in a buy and hold strategy, you're analyzing this piece of property before you buy it, like for a long-term hold, meaning that the highs and lows start to disappear from your investment. You know, you can extrapolate what the cash flow is going to be and the increase in rents. As my previous statement, when I was talking about population, job growth, vacancy rates down, rents up, you can now push that out and start budgeting for the increase in rents. So it's a much easier, calmer way to invest. And the nice thing about that is when you have a 5 or 10-year window, you can negotiate tremendous interest rates, mortgage interest rates. And those mortgage interest rates you can lock in now, especially right now in this next 5-6 months. It's going to be very, very inexpensive. A great time to lock in 5 and 10-year money. Strategic investor, that's a great question. I think the difference between a strategic investor and an average investor is that the strategic investor asks the tough questions. They sit back and they don't get caught up, or they don't fall in love with the property. They don't get caught up in the headlines. They sit back and they go, listen, I really don't care what's going to happen over the next year or 2 years. What I have to do is start to identify markets that are strong and have strength underpinning them, so I can get my cash flow for the next 5, 10, 15 years. And in the book, I give you all of the questions to ask, whether you're a home buyer or whether you're an investor, and how to really truthfully cut through the headlines so you get to the signals in the markets, what matters. Well, here's the interesting thing. Strategic investors will only buy if the property will carry itself and then generate some income over and above all the expenses, including the mortgage. In some of the less strategic investors, or even the flippers, will buy a property hoping that it will go up in value and they can sell it within that 1 year or 18 months kind of window. Well, the strategic investor knows that is a higher risk. Yes, you can get some great returns on those, but it's still higher risk that if the market takes a breath, as we saw in 2008, as we saw in 2010, all these different windows across the country, the market takes a breath and you're stuck holding a property that doesn't cash flow. Then what happens? Every month you're feeding it money. And that's not getting you closer to your financial goal, that's taking you farther away. So you're having to work harder if you don't have a property that cash flows, quite simply. I like to work hard, but I don't want to work harder than necessary. I want my money to work harder than I do. Emotions make strategic investors into maniacs. That's just the truth. The problem right now is the market is filled with so much noise. You've got the bloggers, you've got the people who have never invested in real estate and really don't know a lot. Everybody has a bullhorn. And the headlines, market's going to crash, market's going up, market's going this. It's total confusion. So emotionally, you get caught up. And emotionally what happens, of course, is that you start to make decisions that aren't strategic anymore. You're not asking the tough questions like, okay, well, what about the job growth and the population growth? And here's something that I really want to stress. Do not chase population growth. Because if you chase population growth and you don't know what that population is made up, you've just been caught by the population growth trap. You have to know, you must know what that cohort is, what that average person that's moving into, are they moving in for a new job? And are they a young family? Then it's good. But if they're moving in to retire, then you're going to have a cap on values and your vacancy rates will stay flat and your rents won't go up. Look for the reasons behind the population growth. That makes such a big difference. Hence the reason we talk about GDP growth, job growth, population growth, not just population growth. Well, I believe that it's great to be an armchair quarterback when you're watching the football. It's great to be an armchair manager when you're watching soccer. But it's not great to be an armchair anything when it comes to investment. I have met so many people who have never invested in real estate, have studied it to death to the point of like minuscule number analysis trends, who don't really understand what happens on the street in the process. And a lot of people get caught up in those stories because sometimes they're Pollyannas, thinking the world is great, and sometimes they think that the world is going to end, the Chicken Little running around. But I have decided I'm following the final 30-foot rule. And that is, I will listen to all these people with their stats and their analysis. I'll politely nod and say, that's very good of you, congratulations. And then I will go and speak to somebody who's gone down the path that I've already gone, or I want to go. In other words, if I want to buy investment real estate, I want to talk to somebody who's done it and done it a lot and made mistakes. In my new book, I have decided to share some of my biggest mistakes and how they affected my life and how they have affected my strategies. And it's the same thing. It's really easy just to kind of sit back and just pontificate about the world. But truth is, I really and truly only make final decisions if someone has done it before me. They have to have experience. The armchair is just too easy. So whether, the other side of course, the armchair thing is I want to make sure that their focus is the same focus as mine. So if it's buy and hold, I will go talk to a buy and hold person who's been doing it for 15 years. If it's flipping, I'll go talk to a different person who's been doing flipping. So make sure you're listening to the right people. Some of the top three, I know there's a lot of them listed in the book, but the top three would only buy if it cash flows. Please, goodness gracious, don't make yourself work harder than you need to do. Can you find cash flow properties in every market? No, and that's a good thing. It's telling you it's not a market to invest in. Don't force the river. Number two, be strategic at all times. Make sure you're asking the tough questions. Don't skip any questions. As you'll find out in my book, the mistakes that I made were the ones where I skipped questions and jumped over them because I thought I was smarter than the market. You're never smarter than the market, ever. And third, make sure that real estate does truly fit the lifestyle that you want to create. here's the truth, is real estate isn't for everybody. But I'm telling you, once you figure out the system and you know what to do, it is definitely going to positively impact your financial lifestyle. The markets will go up and down. I've been investing. I had interest rates and mortgages that were 16% when I started out. And now when I hear people panicking that the interest rates might go up to, I don't know, 3.5 or 4.5, I kind of have to chuckle because I have some perspective. But truth be known is keep your perspective. Please focus on cash flow. Be strategic and cut through all the noise and just get to the signals, because the decisions you make today are going to positively affect your family and your future financials and really your retirement. Team in real estate, team in life, team is everything. If you've got the right team, whether it's your family, your spouse, your parents, your business partners, your support network, if they're the right people, life gets pretty easy and fun and exciting. It allows you to take those extra little risks. It allows you to step out with your ideas. But if you have the wrong team around you, the wrong professionals, those who are looking out for them rather than you or your team, guess what? Life feels like a struggle. If right now, and I really want you, if you're watching this, think this through. If you have more chaos than you want in your life, if you have more frustration in your life than you want, take a look at the people who you're surrounding yourself with. What are the messages they're sending you? I've had to choose some very difficult choices throughout my investing career since the 80s. And the unfortunate thing is, people I really liked, they weren't supportive of me. And throughout life, if you build your team with the people who are looking after the whole team, you win. If you're not, then you lose, especially in the real estate game. Your managers, your mortgage brokers, your realtor has to be looking after you, not the other way around. So say, for instance, now you've got your first property, your second, your third property. Now you're starting to get into it a little bit, but this investment world does not work unless you have income. Income comes from tenants. Now I want you to start thinking about tenants differently. I want you to really start thinking them as customers to your business. Your business is renting the air inside this box, right? And the box just happens to have a bathroom and a couple of bedrooms. So you're renting this out. So how do you do that? How do you attract the best customer for that business? Define who your customer is. Advertise to only attract that customer. You don't need 1,000 calls. You need one call from the exact right person. And then once you've got that customer and you have filtered them and you've done the background checks, don't put somebody in there without doing your background checks. I am telling you, I have done that. It's bad. I don't think that I would suggest you don't ever rent to friends or family, because it's very difficult to go, Mom, you haven't paid your rent. We're going to have to evict you. That's never going to happen. So don't put yourself in that position. And then third, please, once they're in there, treat them like the customers to your business that they are. If they're paying you $1,000 a month, that means they're a $12,000 a year customer. They don't care what your costs are. They're writing you a check for $12,000 for a year. In any other business, you would be giving them Christmas baskets or thank you cards and birthday cards and those kind of things. Do that, and those people will never move. That's how you treat this, like a business, not like landlord-tenant.